everybody, and welcome to the 28th edition of LM's Weekly Wrap, our weekly program to cover all the developments in the market. It's been a very busy week. There have been all sorts of developments. Last week, we had a whole host of results, companies announcing their quarterly results. At the same time, there was the monthly sales data with respect to the automobile sector, the GST collections, and of course the union budget, and not to mention the US Federal Reserve meet. So every day, this market has kind of kept us on our toes. And I think as we talk, the result season continues. The number of results keep on flowing in thick and fast. And we also have reactions to the budget, a lot of reactions to the budget. As we analyze the fine print, a lot of things are becoming clearer at the moment. And the global developments also are important. And most importantly, the volatility in the Adani group.
Correct.
So I think an erosion to the extent of 50%.
50%. That's right. Yeah.
Half of the market cap has eroded. So it's a very kind of a precarious situation, a dangerous situation, what we call. On one side, we had a euphoric budget, and on the other side, we had this turmoil in certain sectors of the economy. So first of all, joining me is Jash, and he'll be briefing us about the global developments, domestic developments, and his broad views on the economy in general, which will be followed by the sectoral update from my side. So
Thank
Jash,
you, sir.
Kindly update us.
Thank you. It's great to be back. As usual, I'm going to start with the Nifty levels. Nifty had, because of Adani stocks, I believe that Nifty was under a lot of pressure in the last 1 week. There was a lot of turmoil. The budget was euphoric. On the day of budget, it did go up, but then again it gave up. And today, if we see, there's a lot of buying happening on the Nifty stocks, and even the Adani stocks have moved up. More light will be thrown by Nirav sir on that.
Do you think this could be attributed, today's rise could be attributed to short covering in the market?
I believe there can be short covering, but that must be for the stock that was previously shorted. But now most of the Adani stocks are in futures ban, so new short positions without 100% margin cannot be taken. So there can be short covering, but as if you go to the fine print of Adani, they have taken back their FPO, that they are not going to do a FPO. They're going to return the money to the investors, which also states that Adani doesn't need that kind of money as of now, and they can also raise the money on the personal front. So I think only time can tell how the market will react. For today, it definitely can be a short covering, or it also can be a reversal, because if we go to see from the peak on the December 1st, the market has been correcting. If we go to see, it was about 18,900 levels, the Nifty was there. I think it almost touched 19,000. After that, it has lost about 1,300 to 1,400 points. You are at 17,600 to 700 levels. So I think it can be a sign of reversal, but it's too early to say. We still need to wait and watch. Now coming to the global developments, we had the crucial Fed meet. As expected, they did only a 25 basis point hike because the inflation is in control. The housing sector has slowed down, but the consumption still remains strong. So they'll still be dovish on their policy front. So I think that's a green shoot for the US and the global economy. That would also result to Indian economy, where the RBI doesn't increase rates aggressively, and we can maybe see a peak out of the interest rate cycle in the coming few months. I think that's where we see the debt markets being so in a boom. People are really favoring the debt market because they are getting a very good rate of return over there. Coming back to the budget, now I think that's a third front where the market was driven by. The budget was very progressive. It was a spending budget. If we go to see only the infrastructure spending, it's going to be 10 lakh crores, which is 33% higher than the last year's budget, which was 7 lakh crores. Also, in the fine prints, where the states have a 50-year interest-free loans, they have to use up all the loan money in the next 1 year. That will result in a very heavy spending. coming to the railway sector, they have also in the infra, the 10 lakh infra space, a lot of allocation is there on the railway front. We see Vande Bharat Express flying on most of the routes in the country. Every day there's a new Vande Bharat train coming up. That just shows how resilient our railway boom is. And we can also see on the stocks also, Timken, RVNL, and all the
railway stocks,
Titagar, of course.
Yeah.
More light will be thrown by Nirav sir on that. All in all, I say that even though this week was slightly jittery, I still feel we are poised for growth, but the markets will still remain volatile as there are a lot of factors that are coming in from global front, from the domestic front, the Adani Group turmoil, like I wouldn't say a turmoil, but the volatility on that space. So it's a wait and watch. And on the result front, we had a lot of important results, and I would hand over to Nirav sir to talk more on the results and the sectors. Thank you.
Thanks, Jash. Very, very well pointed out about the global scenario as well as the domestic scenario. Incidentally, there are so many dimensions to the analysis which we do. It's a multi-dimensional, multi-sectoral approach which we have to adopt. But just coming back to the markets, first of all, I think this was a very progressive budget. It was a pragmatic budget. A lot of good adjectives have been used for the budget, and I think full marks to the government for the budget. A spending budget, a progressive budget to uplift the economy. That is one side. But at the same time, when we saw that it was a progressive budget, the markets were under a tremendous amount of pressure. So there is a kind of a dichotomy which has happened. On one hand, you have a strong budget, but at the same time, the markets are under tremendous pressure. Now, at the beginning of this month of this year, rather from January onwards, we've seen reopening of the Chinese economy. With the reopening of the Chinese economy, the foreign institutional investors are also back. They're exploring the investment opportunities in China.
Right.
They feel that the valuations are very, very reasonable, very, very attractive vis-a-vis emerging markets like India, where the valuations are looking stretched. So obviously, if FII is not very comfortable with valuations, and on a relative basis, they prefer China because there is a bargain hunt over there. So one factor which is being attributed to the fall in the markets is that FIIs have been liquidating in the Indian markets.
They have been continuously
selling in the markets, Indian markets, and buying over there. If we look at the data, we can find out that more than 30,000 crore selling has happened in the month of January by FIIs, and that has contributed largely to the fall, first in the IT stocks and then in the banking space. So despite the fact that we had very strong results by private sector players, private sector banks, the private sector bank valuations have been under consistent pressure, barring a few stocks like HDFC Bank. So this is one important factor with continuous FII pressure in the market, despite strong results season, and at the same time despite the fact that we had a very, very strong budget. Now,
so before you start, I would also like you to comment on the Nasdaq that has been going up in the last 1 month.
Yes, we'll cover that.
Yes, sir.
Yeah. So just coming to the sector wise, I think a couple of sectors which really did well from the beginning of the month, whether it was IT and whether it was metals.
Correct.
IT did well on account of the global factors, and metal did well on account of the China reopening. Now, in the case of IT, we have been seeing that Nasdaq Composite was down approximately 33% last year.
Yeah.
And it has recovered to the tune of 11%. It has shown an uptick of 11% in January 2023. In the first 2 days of this month, that is February, we have seen again an uptick of around close to 5 to 6%. So that is giving a lot of boost to the IT stocks, which have been hitherto been under a lot of pressure. So as we have said, the front line as well as the mid-cap IT stocks are likely to recover depending on how they are able to perform in the market. So the outlook for the IT sector looks good. The metal stocks were also looking good, but somewhere down the line they lost their way, and we are seeing some profit booking happening over there. So I think the metal stocks have lost their fizz a bit. Then coming to the auto sector. We've seen the auto sales numbers have been pretty good, and two of the big gainers of this week are from the auto space, and I think Mahindra and Mahindra very strong performance, very stellar performance on a monthly basis, and we have Tata Motors, which has performed quite well. In the FMCG space, we have ITC and Britannia, which have performed reasonably well. ITC doing well despite some adverse provisions in the budget. They have done well. Perhaps their impact was not as high as it was expected. So ITC just moving up in trade, and today we'll be having the results of ITC, so we'll get an idea about how they are going to perform. And Britannia, a very stellar set of numbers. Apart from this, I think as we discussed, that auto sector stocks and select FMCG sector stocks did quite well in this week. We had Ultratech Cement, which was a big gainer in this week. Titan has been a good gainer on the back of strong results. So I think overall the story continues. I think a few sectors like pharma continue to be under a lot of pressure. We have today Divi's Labs, which declared its numbers, and the stock tanked. Literally, it is down about more than 10% in trade. So it's a kind of a market where valuation support is the margin of error, what we call, is very negligible. So if you falter stocks straight away, they tend to lose their valuations. Finally, a lot of people have been asking us about the Adani Group stocks, and I think our answer is very clear. Corporate governance definitely is something which needs to be respected. Cash flows need to be respected. There have been a lot of companies in the Adani Group which have relatively poor quality cash flows, and those companies have borne the brunt basically. So whether it's Adani Total Gas, or whether it is Adani Green Energy, Adani Transmission, Adani Power, Adani Wilmar, these stocks have particularly come under a lot of pressure. Our expectation is that if the cash flows were to improve, then of course the market is definitely going to make amends and give a positive re-rating to these stocks. But in the absence of cash flows, I think the same story gets repeated again and again. And on the other side, we have stocks like Adani Ports and SEZ, which has got strong cash flows. ACC, Ambuja. Today we have recommended Ambuja Cement to our clients. We thought that it was a bargain buy at 330, 335 levels. And of course it did not disappoint us. We thought that it has corrected significantly, about 50% it has corrected from the 52-week highs. So it was a good opportunity to enter at the current levels. So a lot of opportunities emerging. If one were to look at Divi's, I think in valuation terms that is also looking a bargain buy. If one were to look at I think the fall in the market is actually giving us an opportunity to explore different
but I think
stocks.
We should also be very cautious in picking the stocks.
We should be very cautious, and I think but the fall, if it is giving us valuation comfort, and if we see that there is a good earnings outlook, then definitely one can look at those stocks. Lot many ideas, but timing constraints do not permit us. We hope that you liked this edition. Do write back to us with your feedback. Do revert back to us, and I think we'll have the closing comments from Jash.
Thank you, sir. I would like you to ask to like, share, and subscribe, and please download our app for real-time suggestions and recommendations on the stock. Thank you.
Thank you very much.